Good afternoon, ladies and gentlemen. Of course, I say good afternoon to those of you joining me here on the East Coast. Happy November to you all. It's probably the first time I've seen some of you online since we've gone into the November month of 2016. Well, welcome to today's presentation on looking at using Power Options to find new options trades. Now, before we begin, some of you are maybe brand new to Power Options. Maybe you just started your trial, or maybe you're considering starting a trial or a subscription. So we want to review quickly, what is Power Options? Well, Power Options is a patented suite of search and analysis tools designed for self-directed options investors. Our tools will allow you to search across the universe of options in under a second to identify only those positions in a given strategy that match your personal risk-reward tolerance. Of course, once you identify those positions, you can do further research and analysis on the underlying stock or the options that were selected, quickly compare the risk versus reward, and run what-if scenarios for your potential position. We also offer a powerful set of portfolio tools to help you paper trade, track, manage, and evaluate rollout opportunities, and we have countless educational articles, help videos, archived webinars to help you get more familiar with the tools on the site and the various option strategies as well. Now, Ernie Zerrenner created the Power Options tools back in 1997, so we have almost 20 years in business here, but everyone here at staff uses these tools to trade their personal accounts, myself included, so we have many more years of combined trading experience. Now, for those of you who don't know me, my name is Mike Chupka. I'm the Director of Education here at Power Options. I've had the great pleasure of working with Ernie Zerrenner and the Power Options staff for the past 14, 15 years or so. I do handle a lot of the coaching sessions, webinars, and education. For those of you that are currently on a trial or subscribing to Power Options, you can schedule one of those free coaching sessions at any time. It's essentially a 45 to 50-minute walkthrough of the site. We'll answer any questions that you have about the various option strategies or the Power Options tools as well. I have co-authored 2 books and presented seminars across the country during my 15 years here. And we do support over 23 of the most commonly used strategies on the site. I am familiar with all of the strategies, but there are some strategies such as short straddles, short strangles, iron butterflies, and selling naked calls that I don't trade in my personal account. But if you have questions about those later, I'll be more than happy to show you some of the search functions for those strategies as well. Now, what we're going to cover today is reviewing the tools that are available on Power Options to find new positions in your preferred strategies. We're going to look at the features of the search tool and some of the do's and don'ts of setting up various criteria. We're going to discuss how to quickly navigate the filters in the search screen. And of course, we'll discuss the general tips, suggestions, and quick means. If you're just looking at something very specific, you want a very specific search, we'll show you how to quickly do that as well. Now, before we go any further and jump right into the tools there, what I'd like to know is what types of option strategies are you currently trading or researching right now? Are you mainly looking at covered calls and naked puts, sort of parity trades of one another? Are you interested in looking at insured positions, married puts, collars? Are you looking at option buying, buying calls or buying puts, speculating on a market movement? We'll lump straddles and strangles in there as well. Are you mostly doing credit spreads, bear call credits, bull put credits, maybe even iron condors, for example? We can include the vertical spreads, debit spreads in there also. Or are you focusing on the calendar spreads, whether you're doing horizontal or diagonal spreads, different strategies and different securities as well? All right, so we've had the poll open for about 45 seconds. I'm going to leave it open for about a minute or so. If you haven't voted yet, I encourage you to do so. Okay, so I'm going to leave the poll open here for about another 10 or 15 seconds. Navigate quickly over here. There we go. All right, so we've had the poll open for a little bit over a minute right now. We do have representation, of course, in all of our given strategies. I'm going to go ahead and close the poll right now, and we'll share the results with everyone. And don't worry if you didn't get a chance to vote, since we do have representation in each one. we're going to go ahead there and cover each of the strategies briefly, okay, with the time that we have. So 50% of you are doing covered calls and naked puts, but the winner today, 63% of you, doing credit spreads, debit spreads, vertical spreads. 38% of you are looking at insured positions, and 25% of you are doing calendar spreads, and only a smaller percentage, usually I see this a lot higher, only a small percentage are doing long calls, long puts, and maybe straddle or strangle buying around earnings season. All right, fantastic. Well, let's go ahead and hide those results. I'll make sure the screen comes up here. What we're looking at here is the basic trial account at PowerOptions. And the first thing that we want to do is up at the top here on our tab navigation, where we see we have the main home tab, of course, My Portfolio, Signature Tools, and then our selected strategies. We want to customize this a little bit to match what we want to see. So on the far right of our tab navigation menu, I'm going to click on Other Strategies, and this will take us to the configuration page where we can pick and choose which strategies we want to view. Okay, so we have covered call and naked put, but our credit spreads were the winner today, so I'm going to move bull put credit up to number 1 and bear call credit as well. They were already in our selection. We're going to use the arrow keys over here in our field to move those up or down. We'll leave covered call and naked put. 50% of you are doing those. 38% of you are doing protected positions. I'll leave the married put there as well. And 13% of you, we're going to take off long collar and custom spreads and iron condor. 25% of you are doing calendar spreads. Let's go ahead and add in calendar call. I'm just going to select it from the available menu on the left and click the Add to Menu button. That'll put that in tab number 6 for us. And at the same time, we want to put in some long calls or maybe long puts as well. So let's just add long calls into our menu also. So this gives us a representation of all the strategies that you selected. Now let's go ahead and click on Save Configuration down at the bottom, and our tabs up at the top have adjusted based on our new selection. So we'll start off with the credit spreads, of course, which was the highest vote today at 63%. Now, when I'm interested, let's say that maybe we're interested in some bear call spreads. We've got the election coming up in under 7 days. Maybe we're fearful that the market's going to pull back, and we want to see some credit spreads, bear spreads, where we're going to sell an at or out of the money call and buy a higher strike call to generate a credit. Okay, so over on the right here, we see the basic profit and loss chart of a credit spread. Now, whether you're bullish or bearish, in this example, we'll just say that we're bearish. Let's say that I was interested in maybe trading some bear call credit spreads on SPY, broad-based ETF. I have a feeling the market's going to pull back maybe in the next 7 to 10 days, whether based on poor earnings that we speculate are coming up or based on the result of the election, we feel the market's going to pull back and be a little bit more volatile. Well, there's 2 tools that I will use to identify a credit spread position or a debit spread position when I'm in the main strategy menu. First, underneath the bear call is the search by symbol tool, one of the tools that's available, and it's a very simple tool to use. So I click on search by symbol, and the system just wants to know what symbol we want to look at. So I'll type in SPY, and now what I want to do is select an expiration. Well, we can look at November, which is 17 days away. It would be affected by any events, bearish or bullish, of course, that occurs after the election. Or we could simply choose to go to all weeklies. If you wanted to trade something for Friday's expiration, for example, you feel there's going to be a pullback beforehand. But let's just go to November. And now we have some simple background toggles here. We can choose to go to less results, more results, or all results as well. To start, I'm going to go to more results for SPY, standard November expiration. Let's click submit. Now we're going to see a list of various bear call credit spreads that are available here for SPY. In the default view, we see the main expiration and strike price of the option that we're selling. So we could sell the 219.5, the 16th of November expiration, and buy the 220. So it's only a 50-cent spread. Now the net credit is only 3 cents, but the return is 6.4%. Now I do have selected some other columns here, break even, historical volatility, and more. This was done for a specific webinar when we were showing spread trades. But in the search by symbol tool, the search tool that we'll take a look at in just a little bit, you can customize the data view any way you want. Up at the top, we're going to click on the Choose Columns button here, and this will take us to a configuration page where we can select which stock criteria we wish to view and which option criteria we wish to view as well. Now I had selected volatility ratios and implied volatilities for the short and long option for a different presentation. Of course, I have the break-even selected, but other things that might be important to you when you're looking at a credit spread is the probability. In the bear call, we're looking at the theoretical probability that the stock will be below both options. If you wanted to see delta, we could select that as well, the short option delta or the long option delta, the volume or the open interest for our options, and if you want to take a look at things such as the bid-ask spread, and of course any stock criteria you wanted to view for technical or fundamental data. Now once I've selected it, we're just going to add the probability. Let me go ahead and submit and save that. We'll be prompted now to go ahead and close the window so the page can refresh. And now we have our probability ranges. Now, if you're a credit spread trader, you probably have a trading plan already in mind, meaning that although you're bearish or you're planning on a bearish or bullish move after the election or at any time coming up for whatever reason, you probably focus on a certain range of probability. Our top ones here have a probability as high as 87.5%. and down to the 80 range, and as we scroll down further onto this long list of potential trades, we're of course going to see varying descending probabilities. But of course, as we see a descending probability, as we go lower to probability, we start seeing a higher return value. And naturally, we're taking a little more risk, going closer to at the money and having a lower probability. But as an investor, you probably already have a few things in mind. Number one, that first spread we looked at was only a 50-cent spread. Okay, so you might prefer to use dollar strike differences or maybe $2 strike differences depending on your approach. You may want to look for a minimum probability of 80%, but also a minimum return of, let's say, 11% in that range as well. Now this tool is very useful to use if you're looking at more standard stocks and positions that don't have 50-cent strike differences or dollar strike differences even. This is a long list to go through. But we do offer a better tool for you if you're looking for credit spreads one stock at a time. What we would want to use here in the credit spread view is the spread chain. The spread chain will allow you to look for positions one stock at a time. Now I'm going to look at the bear call credit and put debit parity view here. So this will show me not only the bear call combinations that would match a few of my base criteria so I can narrow that list down much more quickly, but it'll also show me the bear put debit parity trade. And we'll talk about that in a moment. So I'm going to put in SPY into the spread chain. I'm going to put my spread width at 2. Minimum net credit, well, since we're going 17 days out, let's force it to be at least maybe 25 cents. Well, out of the money, yeah, we want to be a little bit out of the money, but more important, we're going to focus on a minimum return, let's say, of 10%, and we're going to want a probability of at least 80% or more. Now, I'm going to stick with that November 18th expiration, standard expiration, which is 16 days away from now. Now that I've got my data, let's go ahead and hit submit. So rather than seeing that long list that was in the search by symbol tool, we've narrowed this down to only 2 trades. that have the strike difference that we prefer, the percent return we were looking for, minimum of 10% leverage trade, and the probability we wanted as well. Now the two spreads that are shown, we see a bear call credit spread here on the left with a net credit of 32 cents by selling the 217.5 strike call with SPY at 210 and buying the 219.5. Although we're using 50-cent strike differences, we have a standard 2-point spread. I click the plus sign over here, we get just a basic view of the profit and loss chart where we stand right now. And of course what we're using with the midpoint pricing to get the net credit of 31 cents. So on a 2-point spread our max risk would be $1.69. We have an 18.3% calculated return. And this gives us that probability right at 80.1%. So we're looking at about a 19% yield for our bear call spread with an 80% probability. Now the reason I chose to view the call credit and put debit parity view in our spread chain is because sometimes the parity trade, if I sold the in the money 217.5 strike put and bought the deeper in the money 219, we'd have a net debit of $1.70. Well, if the stock stayed below 217.5, we'd close the position for $2. We'd make 30 cents or a 17.6% yield. I wanted to show that because in this case here I'm going to get more bang for the buck at midpoint with the bear call credit spread at 19%. But sometimes the debit spread, the parity trade, might be slightly higher. And you want to make sure you do that to make sure you're getting the best bang for your buck on the position. Now if you decided you want a little bit better probability, we could go with the 218-220 bear call. Offers a 14.9% yield with an 81.7% probability and a 26-cent net credit. Now you may ask, well, where are the higher probabilities in the 85-87 range? Well, they're not going to match our criteria because they either aren't offering a 10% yield or they're not offering a minimum 25-cent net credit. So if you wanted to see a higher spread, say the 220 to 222 bear call credit spread, which would probably have an 87 or 88% probability below, we'd have to lower the minimum net credit and lower the percent return, and we'd be able to see that view as well. And of course, you can also change this. You can toggle between going to the different expirations. This is a new thing now where SPX and SPY offer sometimes a Monday, a Wednesday, and a Friday expiration. So here's our November 3rd Wednesday expiration. There's our Friday expiration. Here's the next Wednesday expiration on November 9th, and so on and so forth. So it gets a little confusing, but this tool you can choose just to look at one expiration at a time, or we could choose to view multiple expirations. For example, let's click on the November 11th series to see if anything matches our criteria. And here we have 3 different spreads in a shorter time period, 9 days out, which offer a 25-cent net credit with an 80% probability as well. So I might want to go closer in, 216, 218, or even the 217, 219, and still get a reasonable return with a reasonable probability for the shorter term trade. So for those of you doing credit spreads and debit spreads, the spread chain view is a quick way to look up securities one stock at a time and place in some of your basic filters so you can narrow this down more quickly and see only those spreads that specifically match your needs for the underlying security, your risk-reward tolerance, I should say, as well. Okay, now, before we jump into the main search and using the search tools to identify new positions, let's go over to covered calls very quickly. And we're going to talk about what tools I would use in the other strategies that you voted for if I was looking up positions one stock at a time. And then we'll get into the universe of options in the patented search tool. There's a variety of tools that you're able to use for a covered call position, a covered call strategy, if you're looking at positions one stock at a time. The first, the most basic and simplest to use is called the Quick Find tool. You can access it in the submenu here under the tools, or in the Tools menu when you click on the Covered Call tab. So let's go to Quick Find. And just as we saw with the search by symbol, it's a very simple view. I can put in my stock symbol. Let's say we wanted to do a covered call perhaps on Starbucks. So I'll put in my stock symbol. We'll just put in 100 shares. And then we can select the sentiment. Now I'm going to select neutral, which will be neutral to bullish. Okay? And then we'll just click Get the Money on the Table. Now what this shows us is it's looking at the next available expiration that's at least 25 days out in time. So we're not looking at the standard November expiration. We're looking at standard December expiration. This is something that you can't change. It's just a simple view for this position. Now, if we're really bullish on Starbucks, trading at 53.03, this gives us the breakdown of the 3 likely covered calls we would select. I could sell the out of the money. Here's our out of the money 55 call, and we generate $92 right now. So it'd be a premium of 92 cents. The potential profit if the stock moves above 55 would be $289. But this only gives us a downside protection of 1.7%. Then you see a basic write-up on the at the money option. If we bought the stock at 53.03 and sold the 52.5, we could get 207 up front. We have to give about 50 cents back, so the maximum profit, if the stock's above 52.5, would be 154. We have a pretty strong 4% downside protection. And then, of course, if we're more conservative, we want a little more protection, we can see the in the money. We can get 370 up front, only a profit of 67 cents, or a downside protection of 7%. So this is just a very quick view of the next standard expiration, which is at least 25 days out in time. That's why we're seeing the December and not the November. But you probably want to look at more strikes for your position. And you might want to, of course, look at different expirations as well. So most of the time, for covered calls and naked puts, if I'm looking up positions one stock at a time, rather than go into the quick find, I prefer to go directly to the option chain. Now the option chain on PowerOptions will show you the calculated returns that are important for a covered call investor. So we go to Starbucks here, and we see we have the weekly expiration 2 days away, 9 days away, and here we see that we have 3 highlighted columns in yellow, and this is for the downside protection, which is important for a covered call trader. It shows you how far the stock can drop before you're losing money on the position, the percent if unchanged if this was entered as a covered call, and the percent return if assigned. And as before, you can also click on the Choose Columns button up here at the top to change the data field for your call chain as well. But the reason I like using the option chain for covered calls is because these 3 criteria that are probably the most important with probability, and maybe use delta as well, for what you'd want to see in a covered call view. Now let's go ahead and go to next week's expiration, November 11th, 9 days away. And here we can see that we have different strikes that are available now on the weekly series. For the December, we just had the standard strikes, the 52.5, the 50, and the 55. With the weekly series, we have more choices. We're thrown in with the 53, we see the 53.5, and so on. But right here in this section, I can quickly compare, based on my sentiment for the underlying security, and of course, what I want to look at going forward as far as my trading plan, which position offers the return that I want for a 9 or 7 day trade, along with the downside protection. So of course, we know if we go at the money, we're going to have a good time premium. The 53.50 strike here, or the 53 I should say, gives us a nice 2.4% return if assigned for a 9 day trade, and a 2.4% downside protection. And again, if I wanted to be more conservative, we could go down to the 52 and have a 3.5% downside protection and still get a 1.6% return if assigned for a 9 day trade. But if you wanted to be more speculative, we could go out of the money, of course. You'd have the potential of a 3.5% yield with a 1.7% only downside protection. So this view allows you to quickly compare your downside protection, your risk versus reward, on the screen for a covered call trader. I think it gives you more information than you see on the quick find, but the quick find is a very useful tool for just a quick, easy access of what money is on the table right now. For the naked put, I'd use the option chain as well, but I would customize that a little bit differently. So I go to the small chain here, and we'll go to puts now. And what I want to look on a put chain for doing a cash secured naked put would be the percent naked yield, the percent to break even, and perhaps the percent time value, as well as probability and other columns you wish to enter. So now, the percent break even will show you on a naked put how far the stock can drop before you hit break even. And the naked yield, of course, would be your static return for the position based on the monetary requirement on a cash secured position. Okay, so for the covered call and the naked put, I prefer to use the option chain to view the potential returns on the position and compare the different strikes, and again, also compare the different expirations. Now for married puts and calendar calls, our next two highest votes, I'm going to go ahead and use the search by symbol. Now for a married put position, I'm looking to open a new married put, probably following the radioactive trading techniques. And I might not know all of the expiration cycles for my position. So what I'm going to start off with is we'll use Starbucks again as a potential married put. And I'm going to go ahead and select all months to start with. And we'll leave this at more results. Now, if I'm following the radioactive trading principles, we see here a wide range of different strike selections with the different expiration days in parentheses. I'm first going to look for the series that's at least 150 days out. So I see April here at 170. Now that I see that, I'm going to change it to April. I'm going to go ahead and click Submit. And I see here the different strikes that are available, combination for buying the stock and buying the put, and what my new risk is. And I'm going to focus, as always, on risks between about 3 to about 7.5%. So with the stock at 52.96, probably focusing on the April 55 and maybe the April 52.5 even, where we see a risk of 4.2% and 6.2% for our position. Now, why wouldn't I go with the lower risk up here at the 60 strike? It's only a 1.6% strike. I'm sorry, 1.6% maximum risk. Well, I don't want to go too deep in the money. I want to be closer to the stock price, maybe the 55 or the 57.5 with a 2.6% at risk. But here I think is a good view to use. So now that I know that I'm going at least the 170 days out, I focus on the ones that match there. Usually the one that's right in the middle of the three choices I would select is the best one. So I'd probably go with the April 55 put here with only a 4.2% at risk. Okay, and just remember, if you're following the radioactive trading techniques, you'd want to look for the first option that's at least 150 days out, but you could go further out in time as well based on your expectation for the position. The calendar call view and the search by symbol is very similar. We'll use the search by symbol, but now we want to select two different expirations. Okay, we need to select an expiration for the near month and for the far month. So I could go ahead and select now the shorter time frame for November, and then I could go out to, let's say, January of 2017, 80 days out, or maybe February. If you're doing shorter term calendars, what I would do is select all weeklies and then put in a time frame, let's say, of maybe December, which is only 44 days out in time. Okay, and as before, you can toggle between less, more, and all results. You see the basic structure for the calendar spreads that are listed here. And as before, you can go to Choose Columns to change that at any time to customize your data view. I have all the ratios here for implied volatility, delta ratio as well, short and long volume. You may want to look at different criteria based on how you like to analyze your calendar spreads as well. Okay, last but not least, long calls, one stock at a time. You could look at the option chain see all the available strikes and different expirations. But there's a better tool to use. If you're interested in buying calls or buying puts on a specific security, again, let's use SPY as an example. We saw earlier that SPY was around 201 when we were evaluating some of those bear call spreads. But let's say I had the opposite sentiment on SPY, and I figured that in the next maybe 20 to 30 days that SPY is going to possibly be trading up at around 215. Well, I could go to the options chain, I could look at the cost of the various strike prices, then maybe run my own what-if scenarios or Black-Scholes pricing models or other pricing models to see which option would give me the best bang for the buck. I'd rather have a computer do that for me. So if you're in the long call or the long put menu, you want to go to Long Option Finder. And this tool simply allows us to put in our stock symbol, so I'll put in SPY. I'm going to put in the expected price at $215. And let's say we were willing to risk maybe $1,500 monetarily into calls on the SPY. Now the expected date, let's say we think that around November 30th or so, or maybe November 29th, we feel that that's when SPY might hit 215. And we're still bullish on the market. We feel there might be a hiccup in the next week or so, but our projection is the stock, the security, is going to move up to 215 in the next 4 weeks or so. So let's go ahead and click Submit. Now, in that brief instant, what this tool did is it went out and looked at every available option for SPY and every expiration date. And it calculated, based on what we could currently pay right now and how many contracts we could buy, all the pricing models to see what that option would theoretically be worth if the stock did hit our target price on our target date, and it ranked it by highest potential return. I'm sorry, so SPY is currently at 210. My apologies, not 201. I read that wrong before. So with a move of just 5 points, the only series that would give us a good profit is going out to March, 135 days away. The first one we see is the 228 call. It's priced at 70 cents. Based on our investment amount of $1,500, we could buy 21 contracts. And this would give us a profit, of course, of, I'm sorry, if the stock was trading at 215 on November 30th, our option would be worth 99 cents, so we'd have a 39% return. Only 29 cents or so, but it's still a 39% return. So we'd have to have a higher sentiment, of course. So let's go ahead and put in 225, big move, and let's run that again. And this time we'll probably see some closer in options that would give us a better profit because we need a larger move. And now we see mostly December series, but they're pretty far out of the money, aren't they? Because we're projecting a large move. The first one that's shown now is if the stock moved up a little bit more than 10%, the December 222.5 call is currently trading at 14 cents. This is deep out of the money at the current time. We could buy 103 contracts with our $1,500 investment, and if the stock was trading at 225 on November 30th, that December 222.5 call would be worth $2.58, so we'd have a very high return on the position. Now you might say, well, where are the weeklies? Why am I not seeing any of the weekly series? It's because of the target date that I selected. And I selected farther out in time, so the system looked exactly at November 30th, so we wouldn't see any expirations for the 11th, the 18th, or the 25th. So let's say, again, that you're bearish. You're expecting the election to have a major effect to the downward side, but regardless of what the results are going forward. So let's say you feel that the index is going to pull back, SPY would pull back to about 201, drop about 5 or 7% or so from where it is right now, and you think that's going to happen around the 10th. So even though I went into the long option finder for the long calls, if I put in a value below the current stock price, I change my target date to a closer time period, now we see the potential puts for the 11th November expiration, the 16th November expiration, but it looks like the 208 put, which is about 2 points out of the money right now, has a higher cost of 228. We could afford 6 contracts with our $1,500 investment. And of course, if the stock fell to 201 on our target date of November 10th, this would be a profit of $7, so we'd have a 206% return using the 11th of November series. So this tool, the long option finder, is doing all the heavy work and all the heavy calculations for you. You put in your target price, your expectation of the stock, and if you don't know a target price, just look at different options. If the stock dropped maybe 5% from its current price or 10% from its current price, and then decide which one you think is the best bang for your buck based on your expectation going forward. Because if you're looking for a long call or a long put, one stock at a time, you probably already have a sentiment of where you think the stock's going to be trading. All right, so that covers your strategies that you selected. Okay. Ashwin, I'll get to that later. That'll be probably at the end of the presentation. Ashwin asked me a specific question. I can't speculate or give you any advice. He wants to look at Facebook calendar call as earnings tonight. I really wouldn't do a calendar call so much with earnings because it caps the gain. You might end up in a double loss position. But we'll look at that at the end of the presentation. All right. So just for quick review, for credit spreads, bear calls, bull puts, or vertical spreads, I recommend using the spread chain to find new positions one stock at a time. For covered calls and naked puts, you do have a search by symbol tool. There is the quick find tool, but I prefer to use the option chain so you can compare the different strikes and the different expirations. For the married put, recommend using the search by symbol tool. Plug in the symbol first and look at all months, and then you'll want to toggle that backwards to go ahead and look at which expiration is at least a minimum of 150 days out. Of course, you can go further as well based on your expectations. For calendar calls, very similar. Using the search by symbol tool, select your near-term expiration and your far expiration. And then for the long call, we'd use the long call or long put. We'll use the long option finder so the computer can do all the heavy lifting for us based on that series. Now, let's talk about searching from scratch. Going back to the credit spreads. In every strategy, when you're looking for new positions that match your criteria, you'll be able to start off with the sample searches. The sample searches are themed searches that we've put together for you based on our market experience. And so when I go to the credit spreads or bull put credits, we see a default search that you can use looking for ETFs for bull put credit spreads. And we give a brief description here. This search would look for spreads 10 to 45 days to expiration, minimum 4% return. There's also a specific search looking at bull put credit spreads on just those stocks rated a 5-star buy by Standard & Poor's. And if you're into more safety, there's a sample search here for the safety first bull put, looking for large cap stocks with a lower volatility as well. Now, we also offer you some additional. These are a good starting point if you're not sure what criteria you want to use. You're just developing a trading plan in a given strategy, or maybe you just have a few ideas of the strategy, it looked attractive to you, and you're just jumping in. But if we also go into the main search, there are default criteria already set up for you as well for different types of strategies inside the strategy. So when you first go into the search, you'll automatically see a list of trades that match our default criteria. Before you do anything and start evaluating a trade, you want to scroll down below the listed trades once you access the search and take a look at which default search is being shown. Here we see that we're looking at the weekly bull puts. You have a full description here of the search criteria that we set up. But you can also see that all of the stock and option criteria we're using here in the active filters menu. For this particular weekly screen, we did backtest this, and we found that over time, using positions that were in the 2-week out series for credit spreads seemed to give a higher overall return than the 5-day or 7-day out spreads, factoring in a better net credit that's received, management techniques of those positions. So this default search is looking for days to expiration between 8 and 17 days out in time. We have a minimum net credit of 15 cents that we're screening for. Little range out of the money, minimum percent return, of course the probability as well. We're going to go over all of this pretty soon. For the technical fields, there are 4 separate fields in every search that you can input criteria for. The options, the stock technicals, stock fundamentals, and of course the preset lists. So for the technicals, for our weekly bull put, we're looking for stocks trading in an uptrend that must be above the 20-day moving average, and we're looking for stocks where the MACD is above the signal line by at least 3 days. It's showing a bullish spread, a bullish pull away there by at least 3 days. And of course, we've selected stocks to not have an earnings between now and expiration. In this particular screen, we're also excluding indexes and ETFs. In the stock list field, you can choose to screen specifically against a given sector or industry, or remove a specific sector or industry as well. And you can also create your own personal list to screen just against those stocks, 20 or 40 stocks you might have in your list. Okay, so how do we change the criteria? Well, here we're already in the options section. And let's say you like to do weekly bull put or bear call spreads, but you prefer to look shorter term. You want to look for Friday's expiration, which is 2 days away. So we'll simply change the days to expiration in the default field, and we'll put in a screen of 0 to 5 days out in time. Now, I don't want to make too many changes right now. I know that I want it to look for a shorter time frame, so I'm just going to make one change and hit Submit Search. You might have other criteria you want to change, but it's best when adjusting one of the sample search criteria or the default search criteria here to put in one change at a time. So now, with shortening my days to expiration, we see that there are only 2 results that still have that 15-cent net credit, or at least 3% out of the money, and have a 70% probability. So we see that U.S. Steel here at 18.56, we could sell the November 18 put for 22 cents, buy the November 17 for 5 cents. This gives us a probability of about 73.4% and still a net credit of 17. Okay, but in this example, you might want a higher probability. You might want to be further out of the money. So what you'll have to do is when you want to make changes, and this is just to the option setup, I'm going to have to make changes based on 2 things. If I want a higher probability, let's say 75 or more, or you want to see more results, we're going to have to reduce the restrictions. So instead of looking for a minimum 15-cent net credit, I may have to lower this down to 10 cents. And instead of forcing it to be 3% out of the money, maybe I want to lower that to be only 2% out of the money, but still has the probability of 75% that I want. Let's make those 2 quick changes and hit Submit. And notice that I'm only changing right now the option criteria and the relationship between the 2 options in the spread. This opened us up to 11 possible results. Why haven't I made any changes yet to the technicals or fundamentals to open up the search more? Well, because I'd still, regardless of what combination I want to use or what I need to lower some of my restrictions to or raise some of my restrictions to match my trading plan, I still probably want stocks that are trading in an uptrend, stocks that have shown a good performance and maybe a growing level with the MACD as well, and I still would always want to avoid stocks that have an earnings between now and expiration. So we're just focusing on the combination of the options right now to open up the universe of options to only 11 spreads, but that expire in 2 days on Friday. All of them have at least a 75% probability and have a minimum net credit of at least 10 or 15 cents, depending on your criteria. So that's a quick way to narrow down the universe of options. But let's say you're more of a standard expiration trader for credit spreads. Let's stick with bull put credit spreads. You're still bullish. Do you want to look for bull puts? You don't want to use the 2-day out per se. You want to look for a higher net credit. But let's say we wanted to go to the standard November expiration. So what I could do now is simply clear the filters. By clicking the Clear the Filters button, we empty everything out for the stock criteria and the option criteria as well. Now let's build a search from scratch. What would I look for a bullish position? If I was looking at a bull put credit spread or a covered call, cash secured naked put, for example, even maybe a calendar call spread. When we go into the Fundamentals tab, the criteria available in the Fundamentals tab and the Technicals tab will be the same for every strategy. The stock price here is not a limitation because I'm using a leveraged spread trade. When I'm buying a call, I probably wouldn't use a stock price restriction as well. But those of you doing covered calls or naked puts, you probably have a limitation based on your account size. So if you only trade stocks between, let's say, $40 and $180 per share, you would just plug that in. We can look for things for positive change today on the stock, percentage-wise, if you just want to look for stocks that have been moving up today. Earnings per share growth is a filter we can use. And in general, if I'm looking at a neutral to bullish strategy, I typically want to look only for stocks that have shown an EPS growth from last year to this year of at least 5% to reflect good management. You also have a price earnings field that you can enter, shares outstanding. Those of you doing covered calls or married puts, you can screen specifically for stocks that pay a dividend as well. Now, if I want to be a little bit safer, I don't maybe want to see the small cap positions, can use a market cap field here to look just for mid to large cap stocks. And if you don't know which security, what levels to use, anytime you hover over one of the criteria, you'll see a brief description here, a definition of that particular filter, but then in this case we measure this in millions, so the mid cap range is actually greater than 2,000. So if I only wanted to look for mid to large cap stocks, put in a market cap of greater than 2,000. Okay, and of course, I'm going to stay with that earnings date field, not between now and expiration. Now let's go into the technicals. This will allow you to screen specifically if you had a requirement to restrict the volatility of the stock, the historical volatility. If you want to see stocks that have a specific average stock volume, let's say that they maybe only trade 750,000 shares per day. This field is measured in thousands, so just put in 750. And of course, we can set other criteria for Bollinger Bands, simple moving average. We saw the other one there. We were specifically looking for stocks trading above the SMA 20. You can look for the number of days the stock has been above the 20-day or 50-day moving average. And of course, we had that MACD line as well, so we're going to put that back in where we only want to see stocks where the MACD has been at least 2 days above the signal line. Now, let's jump into our options. And we're going to go with the standard November expiration. So from the options expiration time frame, I'll just select November. But again, if you wanted to look at things that say were from at least 7 days out to 40 days out or 7 days out to 25 days out, simply select all months, which really translates to all expirations, and then you put in your requirement for the days to expiration here as well. Okay, now what are the basics that we'd want? Well, we already talked about it with the bear call spread, but let's say that we had a requirement that we wanted a minimum net credit of 25 cents. We're going to want a minimum return, let's say, of at least 10% for the leverage spread. And we want a good probability of at least, let's say, 77.5. Okay, I'll throw that in, 77.5% or more. In addition to that, we want to see some activity. So I'm going to put an option volume today of at least 5 contracts and an open interest of at least 100. Okay, now, you have a variety of other filters you can use for the options. If you have restrictions for implied volatility of the sell option or the buy option in your spread or volatility ratio, if you have a minimum delta requirement for the short option in a spread or the long option, you can plug that in as well. If you wanted to limit the bid-ask spread for the short or the long option, you can put that in any strategy also. But I just kept this simple. Put in our expected time frame, minimum net credit, good probability. I didn't put in the range out of the money, so probability is going to take care of that for us, and my minimum return. And I wanted to see some liquidity as well. Now let's go ahead and submit that. Now, even with a wider target range, 7 to 25 days out in time, And even with only, I'd say, 1 or 2 advanced criteria put in, I'll review that in a moment, we've narrowed the entire universe of options down to only 9 bull put credit spreads that match our base criteria. We put in a wide time range for including some weeklies, whether 2 weeks out or 3 weeks out. Put in our minimum requirement for net credit, return, and probability, the volume and open interest, and then we put in some basic stock criteria. We want to see only mid to large cap stocks, stocks that have shown growth in earnings over the last year, and we want to avoid any surprises with stocks having earnings coming up. And we want to look for stocks in an uptrend and have some good liquidity. I'd say the only advanced criteria we really used was looking for stocks that were 2 days above the MACD line, or the MACD is 2 days above the signal line. So even with just a basic set of criteria, we can quickly narrow down the universe of options to find only those trades that match your base requirements. And now we'd use the Edit More Information buttons to further research the stock, the option, run what-if scenarios with the profit and loss chart. We could run basic calculations for bull put credit and for Black-Scholes. And of course, we could do the what-if scenarios on the profit and loss chart as well. Now, that same system, those same steps are what I'd use for any strategy. So once, of course, I'm comfortable, if this matches the results that I want, we'll just click the Save button there, and I can enter in a search name and a description for my search. And now when I hit Save this search, anytime we come back into PowerOptions and click on Bull Put, our new search will be available, but we'll always be able to toggle back to any of the default searches or any pre-saved searches you've already created as well. Now, something to make things quicker for you. I'm going to skip over covered call and naked put for one moment. And what I'm going to go is into married put now. 38% of you said you were doing married puts. And although we have sample searches set up for you, in the married put, I'm going to advise you just to go into the search when you're looking for new married put positions. And the first default search that comes up is the radioactive search sorted by earnings per share growth. Okay, now this is the default criteria that we discuss in the blueprint, the full work that describes radioactive trading techniques. And you can use this as a stepping stone to create your own personal search. Again, we'll scroll down to the bottom. We'll see the active filters for the married put position. Following the rules in the blueprint, we want to be at least 150 days out in time. We're going to restrict our risk to be between 3.5% and 9%. And we want to see positions that are 1 or 2 strikes in the money. In addition to that, there's some basics for average stock volume. Again, stocks in an uptrend, underlying stock price, and more. Now, we also using a set list here in the stock list for just the IBD 50, CanSlim, and weekly review combined. Okay, so those are just the default criteria we use. But you can change this criteria any way you want in the married put, but you typically want to keep these 3 in place. The expiration at least 150 out in time. You can change the risk range to match what you need, but you don't really want to go too far below 2.5%, and you don't want to really go too much above 9%. Okay? And you want to keep this range as well. You don't really want to go more than 15 or 20% in the money. Now, some of those other factors I'll change. As I mentioned before, when I'm looking for neutral to bullish positions, I do like to see a stock that has at least 750,000 shares. So I'll go to the technicals now, and I'll just update that. And based on my portfolio size, if I'm doing a married put or a covered call, of course, I'm typically only looking at stocks maybe between $9 and let's say about $85 per share. And I could put in the market cap, or I could specifically look for stocks that pay a dividend as well. But I'm just going to make those 2 subtle changes, and we've narrowed it down to 3 possible trades. And of course, what I could also do is manage my risk. If I didn't want to take a risk higher than 7.5%, put that in as well. And this is going to take me down to just 1 trade on NCR with a 7.0% risk. So you can adjust the risk to match your threshold. But remember, for the radioactive trading, keep at least 150 days out. Try not to go more than 20 or 15% in the money, and change the other stock criteria based on your needs. Now, same view for calendar spread. You go into the search. You can start off with some of the sample searches we've created. We have some other default searches created for you. The calendar spreads get a little bit tricky because now we have to select what we want for the near expiration and the far expiration. You have time value and time value ratios for your short and long option, implied volatility and ranges and implied volatility ratio for your short and long options, things such as the delta ratio as well, other criteria to use for the calendar spreads, which we'll go over in a different webinar. But you can use this as a stepping stone. I'm just going to go to the initial values here, toggle to that other search. Now we have a listing of 355 results. This is probably too much for me. And as Ashwin mentioned earlier, many credit spread traders here might not want to start off using the, lack of a better term, old school setup where I'm buying a leap option that's 8 to 12 months out in time and selling a near-term expiration. I might want to look at the weeklies or any expiration for my short-term option that's between 7 and 25 days out. And then at the same time, I'm going to select my far option expiration time frame to be between maybe 45 and 85 days out in time. So I'm looking near term to the weeklies, but not going really more than 60 days out for the longer option. We keep the other criteria there, the original net debit and so forth. But now I'm going to have to change this a little bit more. Because the whole point of this tool is to narrow down the universe of options for you. So you're finding only those positions that match your needs. 400 is a little bit too much, so now we can start entering the different criteria of what we want to see for delta ratio, option volume today, and the open interest will increase our liquidity here. If we wanted to restrict the range out of the money for the short option, let's say I did want to be slightly out of the money, but I don't want to go more than, let's say, 5% out of the money. And I want to be at least 5%, but no more than 10% in the money for the far call. Make those changes as well. So now we've got to play between two different options. Change that. Okay, we've narrowed it down to 140 results. And as before, I may enter in that other criteria for things such as the MACD. In the technicals, the stock trading in an uptrend. Let's look at that. Stock price trading above the SMA 20. And now I've narrowed it down to 59, okay, with the different spreads that we're looking for. These all sort of are in range of what I'd want to see. All right, and the same process for the long call as well. We'd start off with the search, but before you look at any of the trades and think of them as a recommendation or suggestion, you'd want to scroll down below the listed trades. Here's a specific default one we're looking at for Bollinger Bands, where we're looking for stocks that are trading near the high range of their upper Bollinger Band, or maybe have had a breakout recently. But again, you can toggle the different criteria. One thing that would be missing on a long call and a married put search, as opposed to the credit spreads or the covered calls, is return factor. In the married put, we focus more on the risk first. What you may want to focus on in the long call is the percent to double. And the percent to double shows you what is the percentage change needed in the underlying stock price in order to have your option price double in value. Okay. Now, naturally, we'd all like to look for a lower percent to double. I'd look for something maybe less than 3%. But you see here that we're not going more than one strike out of the money as one of our default criteria for this particular screen on the Bollinger Bands. So if I put this in, looking for a low percent to double, which would only show on a deep out of the money option, but my other search filter is restricting it to be no more than one strike out, we're only going to get one result. Okay, I'm surprised we even saw that. I think it would go to 0, because most of the time if you're looking for slightly in the money calls, out of the money calls, you're going to have a higher percent to double range. But since you can't calculate a return on a long call, a long put, for example, what you'll end up doing there is probably looking at the percent to double instead. Now, I know I didn't spend a lot of time reviewing the long calls. So what I'm going to do here, I'm going to send everyone a link in the chat menu for those of you that were doing long calls. And yes, we're still going to get to calendar spreads and covered calls and naked puts. Don't worry about that. But if you go to the link, powerup.com/webinars.asp, sorry folks, there we go. This will take you to our archive webinars page. We can also access here. And the reason I wanted to show this is because if you go into the options strategy section, there is a webinar here on selection criteria for long options. It's a full webinar on looking at the stock technical and fundamental criteria for call and put buying, selecting the strike price, caveats to look out for when you're searching. So those 13% of you looking at the long calls or long puts, check out this webinar from August 5th, 2015 on selection criteria for long options. And there's also some here for straddles and strangles, of course, naked puts as well, and other strategies. So that's in the webinars page under the options strategies. Now, don't want to beat a dead horse, but for covered calls and other spreads as well, Ashwin asked a question, can you add Keltner channels? I can have the programmers look into it, but I don't think that is available in our specific data feed right now. It might require more background programming, but I'll take a look at that, Ashwin, to see if we can find a source for the Keltner channels or calculate them ourselves for the search. Okay. So as before, when you go to cover calls or naked puts, the results that you see will be based on the default criteria. First, always scroll down below, check out the criteria and make changes that match your investment needs and your trading plan. You can always start from scratch and hit clear filters and then just put in the basic 5 or 6 criteria that apply to your trading. Even if it's as simple as I want a minimum 5% downside protection. Let's look for standard November expiration. So for a covered call, I might say I want a minimum 4% downside protection, minimum 3% return if assigned. I want an option premium. The call that I'm selling, I want that to be at least 50 cents. I'm going to put in some basic liquidity, option volume today greater than 10, open interest greater than 100. And at the same time, for let's say the fundamentals, you wanted to avoid stocks that had an earnings between now and expiration for a new covered call position. We'd enter in our stock price range. Let's put in that 5 to, let's say, 185 again. And then the technicals, hey, I want to see a stock trading in an uptrend, maybe above the 20 or 50-day moving average. Put in a basic stock volume as well to look for better liquidity. So we put in just a basic time frame, the return that we might want for our trading plan, downside protection, minimum net credit, and the stock moving above the 20-day moving average as well, not between now and expiration. Let's go ahead and submit that. All right. Oh, well, here's a problem. I see we have 81 results. There are all these 2 and 3 times highly volatile ETFs. It's not a good idea to enter with a covered call. You may make a good profit, but you may also suffer a large loss. So let's take a look at another feature here. Let's go into the lists field, and here we can choose to screen specifically against any sector or industry, or remove any sector or industry. Or I could choose to screen against stocks just in, let's say, the IBD 50, or maybe NASDAQ 100, or the S&P 5 stars, the S&P 100. There's various lists here, and of course, you can create your own personal list as well. But what I'm going to do here is remove a list. I am going to remove leveraged ETFs from my search, any of these 2 or 3 times ETFs, and let's see if we get any good covered calls that matched our criteria. Well, there's that one on US Steel. We still have an ETN in here as well, the VXX. CDE, Coeur Tech is there as well, Tech Resources. Can I remove the other ETF as well? Of course. But what you'd want to do is create your own personal list. So what I could do is click on Create Personal Lists, and then what I'm going to do is Combine Lists. And what this allows you to do when you click on Combine List is I can check various lists. So what I'm going to check here is leveraged ETFs, indexes and ETFs, and inverse ETFs. I'm going to remove all the ETFs and ETNs, and I'm just going to call this ETFs, ETNs, remove. Okay, and let's go ahead and create that. I apologize right there. Okay, let me go back 1 second here. Now that we've done this, Vaz, I'll get to your question in just 1 minute. Let me close that window. It's going to ask me to refresh the page there. We've got our criteria set. Now we're going to go back to lists. And what did we just call that? I'm sorry, ETFs to remove. No, I've done this several times. ETFs, ETNs to remove. So now let me submit that. We've created our combined list for ourselves. And now we have those stocks that match that basic criteria of just a downside protection of 4%, percentage return of at least 3%, and the option bid of at least 50 cents as well, with some other base criteria. So we kept it simple. We've narrowed the universe down to 8 results. Okay. Now, I'm sorry, Vaz says, do you have to be a subscriber to watch the archive webinars? Nope, that's a public page. You can access it at any time. It says they're not clickable as they're shown on the page. I do apologize for that. I've reviewed it probably too quickly. Let's go back to the webinars page for you. And all of these webinars were actually loaded up to YouTube. They may not be public on YouTube. They may be unlisted. But when you're looking at any of the lists here, for option strategies, for example, just click on the YouTube link. Here's selection criteria for long options, and it'll pop right up for you. Okay, so it's not a link to click directly here. It's just listed over here in the format field as well. Okay, so you'll be able to access those at any time, no problem. All right. Okay, so that's the search for covered calls, and for the naked puts it's the same. But while I'm here, got to point out a new feature to everyone. Well, based on a lot of times we get questions, the goal of the PowerOptions tools is to keep it simple. You have your trading plan in mind. You might have developed a trading plan for certain strategies, and that's why you want to use the search tool. It's to put that into play and find only those results that match your specific criteria for your trading plan. But if you're just getting started, maybe you're looking for a little bit of guidance for you, those of you trading covered calls and naked puts, we have a new feature here called the picks of the day. So for covered calls, there's a standard picks of the day looking at standard expiration. This is just going to show you the top 3 results. You can see the criteria that are being used here, and you can click this link to see how we developed the results. Ernie goes through what he did. He back-tested criteria over a 12-month period to analyze which criteria perform best over different markets, of course, and over different time periods. And this criteria that we've been using here, this is for the standard expiration, of course, just the weekly, standard picks of the day. There's also a weekly picks of the day, which will give you ideas for shorter term. And of course, we saw 2 of those in our list, Tech Resources and Newmont Mining. Looking for stocks that were above a 20-day moving average and had a crossover, had minimum requirements for percentage return as well, and downside protection. So it's similar to the search we created as well. And of course, you can click on that to see how we develop these results and see if that criteria we're using, a description Ernie put together for you, matches your specific needs as well. And for the naked put, of course, you'll see the picks of the day for the standard expiration and weekly picks of the day as well. So you can use that as a quick reference, but I encourage you, when you pull up the weekly or standard picks of the day the first time, click on that link to see how we develop these results. Review the criteria that's used and see if these match your trading plan, or maybe you think they're too aggressive. They have been back tested. When you click on see how we develop these results, you'll see sort of the return results here that we experienced over that 12-month period, what we used as far as exiting rules for the given positions that were entered on the weekly picks of the day. You'd want to follow that rules as well and see if these match your investing needs as well. Okay, so last but not least, Ashwin's been very patient, and he says, can we look at Facebook calendar call with earnings tonight? Well, I'm going to show you 2 things, Ashwin. Naturally, we already talked about the search by symbol tool. Okay, and you've got earnings coming up tonight, so you probably want to be a little bit shorter term perhaps. I don't know your specific requirements. I'm going to put in Facebook, and I'm going to use all weeklies here. Let's select our far out month to December. You could toggle this any way you want to. And for right now, I'm going to select more results. Okay. Now, okay, that's good. You'd say you would sell November 4th. Well, I can't do that specifically here, but we're going to walk you through how you can do that on the search. So, the search by symbol tool, Ashwin, will give you some ideas. You can see the November 4th series that are available. The stock's at 127.39. On the top here, you've got a variety of combinations already selected for you with the 129, 128, 130 strike compared to the other strikes for December, or whatever far out series that you'd want to select. You have your max potential return if assigned. That's important. I'll talk about that in a moment. As well, the downside protection. Similar to what we'd see in a covered call, but the downside protection field in the calendar spread means how far the long call can drop in value before you're losing money on the trade. Okay, so you can see the different strikes here that are available for the calendar call. Now, why did I mention, let me take a look at one of these here. This is the 110, so that would actually be pretty decent. But remember, in the calendar spread, what's shown as the percent if assigned is really the maximum return you'd make on the position. If and only if the stock is trading right at your short call strike price at expiration. If it moves up below that, this one's a pretty decent one. The call is deep enough in the money, a cost of $18.30. Okay, so you'd have a debit here of $16.15 per one contract. But a lot of times, if you try to force calendar spreads that have a higher return, and let's say we're using the 130 and the 125, or maybe the 130 and the 120, you'd see a calendar spread that has two ways to lose. Not necessarily a standard horizontal spread, but even some of the diagonals might give you two ways to lose if you put the selection strike prices too close together. Let's go back and see if we have one. I'm looking for a 130, probably a 129, I'm sorry, with a higher up strike. Here's a 129, 120, and this is the 129, 125. Let's take a look at that profit and loss chart very quickly. So, okay, not too bad, but here's our max return on the position, which is fairly high because you've got a very low debit of 424. And the percent return is relatively high if the stock's trading at that price, okay? Now, here's another trick I want to keep in mind. I want you to keep in mind. Okay, this position, the spread that you're seeing here, the 129, 125, you're right. This is a high volatility. The return also, the December might have a high volatility as well. It's at 0.3126 for Facebook. That might be a little bit higher. So if we ran a projection, number one, of where this stock might look like, let's say tomorrow, tomorrow, let's say the stock trades down to 125 per share, we can go ahead and hit calculate, and it shows us the volatility we'll be using, and here you see you have a gain of 110. You might expect a volatility crush, so let's say that you expect the short option to go back to maybe 0.28 and the long option to be around that where as well. So I put in 0.28. Well, now you see you have a smaller gain. You would have a reasonable profit almost expiring worthless on the 129 call that you sold, but this one is also going to lose value as well if the stock pulls back. And of course, if it went up to 130, what will we look like? The volatility adjusts after that. We still have a profit of 224, about 2/3 of the max you'd expect on the position. Okay, now the profit and loss chart is where you can evaluate, Ashwin, of course, what you'd want to, how you'd want to factor in the implied volatility. But for your needs, and I'm not going to spend a lot of time on this, we did show the search by symbol, but you have so many strikes to go through. We didn't have a spread chain available for calendar spreads, but you can use the search tool to look at one stock at a time based on your needs. So let's go to search again for the calendar spread. Let's clear these filters. Okay, and you're going to select all months for your short-term expiration. Let's put in 0 to 5 days. We'll focus on the near-term expiration. And for the far months, I'm going to leave it all months, but let's say you wanted to go at least 25 days out to no more than 50 days out in time for your long option. You'll be able to customize this later any way you want to. Okay, and now you want your short strike and the option that you're selling to be at least maybe 0% out of the money or more. You want a slightly at or out of the money option. And let's say you want it to be maybe in the money, but no more than maybe 5% in the money or more. You can create this anyway. This is for the far option on the bottom and the near term on the top. And let's say you wanted your debit to be no more then let's say $8. So I put in a negative $8. So we have to think in reverse. It shows a net credit here on the spread, but it's actually a net debit. So I want that to be more than negative $8, which means only a debit of $7, $6, $5, and so forth. Okay, you got to think backwards a little bit. Now you're looking one stock at a time, so you're not concerning yourself with volume. You could put in delta ratio, but all we have to do now, we've set in that we want November, 0 to 5 days, and then you can put in your months. I put 25 to 50 for the FAR option. But let's go into fundamentals. And here you have a search by symbol as well. So I'm just going to put in Facebook, and let's submit the search. Now I have 18 total results, 129s, 127s, and so forth. Here's a 130, 124. You didn't see the 130, 129 because the stock's at 127. Remember, I said I want it to be sort of in the money with my long option. So if you want it to be out of the money option, you want to speculate further. Put the FAR option out of the money by greater than 0% as well. Let's see what we get. Here's the 128s. Here's the 130. Here's the 129. Here's the 129, 128. Okay, so I don't see the 130, 129 there. Why wouldn't I? I didn't put volume or open interest in there. That credit would be less than 8. Okay, but that's how you would do it. You could use it by one symbol at a time. If you don't see the one you want, just go to the custom spread tool and build it on the fly. But by using the search by symbol tool here, you can easily just put in some basic option criteria and narrow it down to the calendar spread that you wanted to do. Yeah, that's what I would suggest too, and that's what we had set up originally, the in the money one. Okay, so we go 0 to 5 again in the money. Just at or out of the money on your short near-term option. And remember, with that base criteria, because we put in the stock symbol, you only had 18 results, and you could filter this further based on time frame. Again, based on which strikes you wanted to see in or out of the money, or if you did have a different requirement for minimum net credit that you wanted to pay into the position. So clear out the filters, go into fundamentals. This will be the same for any strategy. If you wanted to look for specific criteria on a iron condor, for example, on SPY, you could go there and see that as well. These prices are 20-minute delayed. My trial account that I use for the webinars is 20-minute delayed. Ashwin, this is not real time. But we do have a real-time service, of course, as well, that you can look at any time. You can subscribe to the real-time service at any time as well. All right. Well, ladies and gentlemen, if you have any last-minute questions, go ahead and send those in. I just want to go through the review here very quickly. You know, basic tips when using the search tool. Remember, use the default criteria inside the search or the sample searches as a stepping stone to create your own personal search. When you're adjusting criteria from the default searches, just change 1 or 2 of the criteria at a time and then hit submit. If you change 5 or 6 criteria or 7 and you hit submit, you might see a message that says there are no results that match your criteria, and you don't know which one really affected it the most. So it's best just to adjust the default of the sample searches 1 criteria at a time. Now, you saw that there were a lot of criteria that were available for the options, the stock technicals, and the stock fundamentals. But don't be overwhelmed. I want you to go in and look at some of those other criteria that you might not know, hover over them and get the pop-up definition, of course, see how they might affect your search results, but to start with, just use the criteria that you would use that match your trading plan. Don't feel any pressure to use all of the available criteria, okay? Because if you put something into each of these stock, the option, the technical, and fundamental criteria, you'll get no results, okay? When creating your own search, always start off by hitting clear these settings first. That'll empty everything out and you know you're starting with a clear template. The first thing is input the settings that apply to you in that given strategy. Put in your basics for what you want for your trading plan, for your option. What return do you want? What protection do you want? Range in or out of the money based on the strategy. Probability, for example. Remember to submit your search before clicking save. You know, you always want to submit the search first to make sure you get the results that you want to see. Now, if you put in a list of 7 or 8 criteria, only 7 or 8 criteria on a given screen, and I'm sorry, you see a result that says no stock options match your criteria, it's too restrictive. Something in there, you might be looking for something that's too high. For example, if you went into the credit spreads and you put in just a weekly trade with a probability of 90% or higher of expiring worthless and a return of 60% or greater, you're not going to get any results. If it was that easy, everyone would be trading credit spreads. It's not that easy. Okay, so for a weekly spread with a 90% probability, you're looking at maybe a 3 or 4 cent net credit, which translates to probably only a 3-4% yield, depending on the strike differences that are available. So if you just put in a few criteria and say no stock options match your criteria, then that means that they're too restrictive. You're looking at something that's clashing with one another. It's unrealistic, perhaps. Or it could be that maybe we are using a filter there that has a specific setting. We saw the market cap was measured in millions, the average stock volume is measured in thousands, excuse me. So you might be putting in a filter that's errant as far as how we're looking at it, but remember, you can give us a call anytime. We should removing the leveraged ETFs out of our covered call screen, so we are avoiding those 2 or 3 times volatile positions, but you could also create a basic search just to include the ETFs if you just want to trade a specific strategy against broad-based ETFs or indexes, removing the leveraged ones as well, looking at the standard ETFs but removing the other ones. And if you're screening for dividend-paying stocks for your covered calls, maybe your married put positions, I usually suggest looking at no lists to start with. The S&P 500, S&P 5-star list is still pretty good, but things such as the IBD list, they tend to filter out a lot of the dividend-paying stocks because they're not as volatile or show a lot of movement as IBD would prefer. So sometimes it's best to start with no lists when looking for dividend-paying stocks, or you may want to lower the historical volatility if any are already there. Stocks that pay a dividend will typically have a lower stock volatility, maybe in the 20% range or lower as well. All right, so remember, trading plan, make sure the criteria that you're putting in match your market sentiment. If I'm selecting a bull put credit or a naked put, I want to put in criteria that matches my market sentiment. Pick stock criteria that match the strategy, of course. Set your time frame. Remember, it's easiest just to select all months, which really applies to all expirations, and then set your days to expiration whether you want to go weekly. If you just want to look at standard expiration, just select the next standard expiration from the drop-down menu. You can go longer term. And again, make sure that you have realistic expectations. You're not going to see bull put credit spreads 5 days, 10 days out of time with a 90% probability and a leveraged 100% return. Okay, so always keep that in mind when you're looking at new positions. Further to Ashwin's question, we do offer a variety of different subscription services. We do now offer an end-of-day service. So the data is only updated at the end of the day. You still have access to the search tools and other functionality, but some functionalities such as the picks of the day and emailing the portfolio alerts are not available on the end-of-day service. Well, that's $40 per month. The most common, most popular is the 20-minute delayed service, which we were looking at today. So anytime you run a search, refresh the page, you might be looking at data. It's delayed at 15 to 20 minutes, and that's $60 per month. And then we do offer a real-time service. So every time we refresh the page or run a search, it's not streaming, but every time I refresh the page, run a search, or refresh my portfolio, I'm seeing the numbers and calculations at that very instant, and that's $120 per month. And then, of course, the historical data is also available as well as an upgrade to the 20-minute delayed and the real-time. Well, I didn't see any last-minute questions coming in. I do want to thank you all for joining me today. If you think of questions later on, go ahead and send us an email to support@powerop.com. Remember, you can also call us during market hours. We're available here. If you live inside the U.S., you can reach us toll-free at 877-992-7971. And if you live outside the U.S., you can reach us at 302-992-7971. And there's contact information at the bottom of every Power Options page.